Hi, this is Randy Finney with the Right Side of the Chart, and today is Sunday, February 11th, 2018. I wanted to get this video out tonight because I think we're going to see a pretty good bounce, and I wanted to give everybody give everybody the chance to look at this before the market opens tomorrow. Or as soon as possible thereafter, because I think we can see a pretty sharp bounce. I think there's a good swing trading opportunity in the gold mining stocks. I know I just did a video recently looking for more downside in gold, in the dollar. However, like I always say, the charts are dynamic, and so is my analysis. So, in reviewing the charts tonight, I think we have a nice trading op here, and I think we need to move on it quickly. I'll go over the charts. I want to start out with the dollar. As you guys know, for those of you who followed the site for a while, I always say that I believe any analysis on gold or the gold mining stocks is incomplete without incorporating analysis on the US dollar. And that is because there is such a tight inverse correlation between the two, meaning when the dollar falls, gold goes up, and vice versa. And what I'm referring to, of course, are the trends. There are temporary disconnects between any relationship of any asset classes, meaning days, weeks. Sometimes you can see that the correlation go away, sometimes for months. But if you take any long-term chart, go back decades, plot a chart of the US dollar index against gold, and you'll see that clear inverse relationship, meaning one goes up, the other goes down, and vice versa. So, with that being said, we're going to start out with the dollar. And then I'll segue into gold and GDX. I'll give you guys some price targets and some potential scenarios, buy points, all that good stuff. This is starting out here. I want to just take a couple steps back, look at the analysis that's been posted on the site on the US dollar index. This goes back to November 24th, 2016, just before the dollar topped. For a while there, I've been making a case that the trend was up. No reason to fight it, but there were big divergences building. I was pointing out these negative divergences, and this is a weekly chart, a 10-year weekly chart. Divergences in the US dollar index, and there it is. And mentioned at that time, although these divergences on the PPO and RSI are very large and portend, there was a typo there, that means to be meant to type portend a likely major trend reversal in the dollar at some point in the near future. However, both the PPO and RSI are still pointing higher, and as such, we haven't confirmed the divergences. What I mean by that is when you see these indicators, these are momentum indicators, and they were still pointing up. However, you could see that we were overbought, and the odds of these divergences being taken out at that point, meaning you take out the previous reaction highs when you're that overbought, were slim to none. So a lot went into that analysis, and again, I followed up the next chart on the weekly time frame. There were a lot of daily charts posted in between. On January 1st, this is right about the time the dollar topped. I mentioned that the dollar index now looks poised for a major trend change in the coming months. You could see the divergent high. You can see the indicators start to roll over here. There was a reversal candlestick, and that marked the top in the dollar. And so at that point, we were bullish in long gold, gold mining stocks, things like that. And these charts, these weekly charts, are really the realm of the long-term trader, the trend trader, or long-term investor, I should say, or trend trader. Swing traders, we're going to get to in a second, the intraday charts, the 60-minute charts, and the daily charts. But let's see where we went from there. So that was the top. Just about a month or so later, I followed up with this one, DXY weekly chart, February 6th, and said, well, there's a decent chance for an oversold bounce in the U.S. dollar index at this time. However, the longer-term outlook for the U.S. dollar remains bearish following the recent overbought divergent high, coupled with the longer-term bearish outlook for the euro-U.S. dollar. So you can see my scenario drawn out again. This was early February. You can see a scenario of a kickback rally followed by more downside in the coming months. There were the divergences. You can see down below, they were confirmed right here, that bearish crossover, everything you wanted to see. From that point, let's see, the next weekly chart we have here is July, and you can see that's exactly what happened. We had a kickback rally at that point. This was that February low I just showed you. We kicked back and then continued lower as forecasted. You can see this was a key support level here in the dollar that was highlighted at the time. So I had a scenario bouncing there and then continuing lower. And then most importantly, and again, this goes back to July of last year, July 13th. I had the US dollar going back down to the 93-ish level, followed by a bounce, and at least one more thrust down to the $89 area. These are key targets. They were targets laid out going back, many, many months back. And now let's just take a look at the most recent chart here. This is the chart of the US dollar index as of Friday's close. I had to flip over to white chart. Those black charts I was showing you with DXY, those were from TC 2000. They stopped providing data on the US dollar index. I have many different charting programs I use, so I just flipped over to USD, which is the same index, US dollar index. And so the chart might appear a little different. I think, yes, because I have a longer time period. This one goes back more than 10 years, so you're seeing a higher reaction. However, the price action is the same. We continued down. We hit that 90, 92-ish, 93-ish level. We had a bounce as expected. We came down almost to the button to my target. If we zoom in there, you can see it's between 80, right about 89. Yeah, that's right around the 89-ish level. And again, that wasn't just a wild guess. This was a well-defined support level you can see going back for years that had capped all the other advances. So where I'm getting at right now, so I'm just taking you through, over years of analysis on the dollar, played out perfectly, and of course gold played out, the same way with each of these. We had a big rally in gold off that low there, or the high in the dollar, I should say. Uh, this is when gold corrected. This is that big rally we recently had in gold. Remember, everything's upside down. So I wanted to point out a couple things here. Not only have we hit my target right now, that I was calling for a while, but we also have bullish divergence in place. You can see the positive divergence on the RSI above. I have the PPO down here. Now, those divergences are not yet confirmed, but they're potential divergences. We had the dollar at support, and it's already bounced off that target. And I think we're going to bounce up here. That doesn't look like a lot. This is a weekly chart, again, going back decades, but that's a pretty big move in the dollar. So let's zoom in, and I'll give you some near-term targets. We'll look at GDX and gold, but I wanted to give you the bigger picture on the dollar because this is where trend traders and investors should really focus on, not so much the little zigs and zags, because on the right side of the chart, I wear two hats personally, and what I post on the site. I'm a swing trader. At times I'm day trading, but I'm also an investor in longer term accounts as well. We'll get back to the dollar in just a second. I'll look at the euro US dollar pair, and then we'll zoom all the way down to the 15, even maybe the 15 or the 60 to 15 minute intraday charts. But let's look at GDX, because first and foremost, this is where I think the trade is. I was asked last week on the site, even though I had been bearish on gold and GDX, but I had also made it very clear, and someone asked why. Why is GDX falling so much if gold is holding up? And I said the reason for that is gold is a flight to safety instrument, particularly in times of very sharp market sell-offs. You see money usually move into treasuries. We didn't get so much of a bid into treasuries this time. However, as you guys know, if you're watching this video, this is for subscribers only. I'm looking for a bounce next week in treasuries, and that'll probably carry forward for at least a few weeks here, I think. And I'm also looking for a bounce in GDX, and I'll make the case for that here. First, let's look at this daily chart. GDX has fallen to a key support level. I went over this in a recent video, I believe last week. This yellow line that comes in just above 21 has contained every single pullback so far this year without fail. And you can see Friday, there's a big doji we hammered off there. Here's January of 2017. So this is 2017 here. And again, this is a very important support level for GDX as it stopped all pullbacks on the miners. And, give and take. When you're talking support levels, it doesn't have to be to the penny. It doesn't have to be $21.23 or whatever that level is. especially with the volatility you have in the miners. That it's a very well-defined support level. It also capped some advances back here. There was a period of consolidation around that level back then in 2016. So that's number one. Uh, More importantly, well, as importantly, it all goes together hand in hand. We have potential bullish divergence. You guys know I love to see for swing trades and even trend trades on the daily time frame, bullish positive divergence. We had it back here. There was a divergent low right there, big rally. We had another second divergent low, another big rally right there. You can see the rally there. You can see the rally there. We had a divergent low here, leading into the 2016 lows in gold and GDX, or the late 2016 lows, big rally. And we also had, it's off to the left of the chart, divergence back there. So that's what I like to see. If you want to know where I think GDX is going, at bare minimum, you can see these target zones up here. Let me zoom that in. I have the first target zone around 22.28, so we'll call that 22.25 or so up to 22.50. That's my first target zone. I have a high degree of confidence that'll be hit, and I think it'll be hit very soon. And I would also put very good odds. This is my preferred swing zone right here, 23 to 23.15. It's a pretty well-defined level, a lot of reactions to the left of the chart. And I think just based on what I'm seeing in the charts, we can make it there, especially if these divergences are confirmed soon. By confirmed, we need to see a bullish crossover on the PPO before it takes out those lows. As long as it makes an equal or higher low, then that's bullish divergence. Right now, we have so far a higher low in the RSI versus prices making a lower low, and that's bullish divergence. So there it is. On the daily time frame, I can make the case, and I like to see that big. That's a very bullish reversal stick yesterday. It shows you, here's the body up here. That's a doji. It shows you the miners fell sharply and then recovered and closed near their highs. And if you see more upside this week, that will only confirm that as a bullish reversal candlestick. Let's zoom down, look at the intraday charts. Here's a 60-minute chart. Again, if you've followed the site for a while, you know we were bullish and long down here. I pointed this bullish falling wedge, divergent low. That was a breakout. Started to get, I booked profits a little early and was looking for reversal. I booked profits up here. We hit these targets, but we had a divergent high here, second and a third divergent high. Each of those divergent highs led to corrections, and it was the third one that was lights out. Now, I talk about this a lot, and we've seen this in the markets, the equity markets. It's very common to see, especially during a strong uptrend, a series of consecutive divergent highs, and essentially they're just one large divergent high. So this was divergent high number one, divergent high number two, and divergent high number three, which really you can take them as three separate divergent highs if you're swing trading. Each one led to a profitable pullback trade, or you can look at the bigger picture. And for whatever reason, you usually don't get four of these. It's usually at most three consecutive divergent highs that all, extend. Each one's an extension of the previous divergent high as long as these indicators are making equal or lower highs, which was the case. So there it is. We had a big sell-off. Now, I talked about earlier in the video the fact that gold tends to catch a flight to safety bid when there's a lot of panic selling in the markets, and therefore, although I made the bearish case for a pullback in gold, I stated this clearly over the last couple of weeks that I didn't expect to see a big waterfall sell-off or anything, that the weakness in the broad markets would most likely give a tailwind to gold. In other words, you had cross currents. You had bearish technicals, but yet you had people rushing in, money coming out of stocks, going wherever they could find safety. And in this time around, unlike most other sharp corrections in the market, they weren't moving into treasury bonds. Again, I think that's going to happen, but I think that's what held gold up. Now, with that being said, I just talked to you a minute ago about temporary disconnects between the two. Uh, let's talk about reversions to the mean now. This is GDX. Again, we're on a 60-minute chart. What I'll do here is I'll grab the highs back from what was that, January 29th, 25th. I'm just going to measure from the high to the low. GDX fell so far over 16%. If we look at gold over the same time frame, this is GLD, gold only dropped about under 4%. So about 4%. So GDX fell over 4 times as much, and that's an unusual drop. So where I'm going with this is there's a snapback mean reversion trade coming between GDX and gold, I believe, because gold, yes, it fell, but it only fell 4%. The miners fell 16%, and therefore I think they're going to come back. And if nothing else, even if my analysis is dead wrong, you could do a pairs trade. You could go long GDX here, short gold. Either way, that gets a little complex. Don't forget about that if you don't know what paired trades are. But I think that's what's going to happen here. I think we're going to see a nice kickback rally in GDX. And again, like I said, there's the technical case that I made on gold for the reversal. You had the negative divergence on this 60-minute time frame. You can see the lines there. Divergence 1, divergence number 2. There it was, divergent high number 1 right here. Wrong tools, trying to grab a line tool. There it is, divergent high number 1, divergent high number 2. We had a little correction there, and it was that second divergent high that did it. So I could still see in the coming weeks to months more downside in gold. Again, what I'm looking for here is a swing trading op. It in GDX, it does have the potential to morph into something more on gold. When we go back to a daily chart, this is a level that I think gold will work its way down to, and I would be very interested if gold gets here. That's about the 123 level. But what I think may happen is a little pop here. And again, I'm not as concerned right now about gold. Even if gold just holds its own, trades sideways for a while, I think we can get that mean reversion trade back in the miners, and then maybe one more thrust down, and I would love to see gold get here. If it doesn't get there, maybe it continues on up. Great. Keep in mind, you guys know I like to use the PPO and the MACD. I like to use a zero line to define trends. So what I did here is here. Let's do it again. I'll put a line over the zero line, which is this dotted line. And that does a pretty good job in a lot of securities of defining the major trend. And what I look at is, I don't look at the PPO line, I look at the signal line, the 9 EMA. And when it's above zero, like it was here, the trend is bullish. When it's below zero, as it was here, the trend is bearish. And you can see back here, that's when it crossed below. That's when it crossed above. Sometimes you get these whipsaw signals when it's moving sideways. However, there's one more application you can use besides just the bullish and bearish crossovers is once you have a bullish crossover or a bearish crossover for that matter, this line tends to act as support or resistance. So you can see we made the bullish crossover there. We came back, and again, don't pay attention to the blue line. That's why I don't use that one. It's too whippy. It tends to cross over. I like to use the 9 EMA, which is the signal line, because that's the last of the two to cross. So right there, you can see a perfect back test. We crossed through, there was a whipsaw signal, but right here, you can see we had a bearish cross. We came over, it was bear trend, we back tested and it failed. So it's very often to see a back test. And most importantly, again, the crux of using this as a trend indicator is when that 9 EMA is above, the trend is still bullish. So right now, despite this correction in gold, the trend is still bullish. So going back to GDX, 60-minute chart, there's a trend line. There were those three divergent highs, lights out. That trend is that's such a steep trend line that really what you need to do when you see a trend line that steep, zoom down to a shorter term time frame. So that's what I've done here. I just clicked on a 15-minute time frame, and it shows you GDX. Now, what we don't have, what I would prefer to see, it's not absolutely necessary, is a divergent low. Ideally on the 60-minute time frame. I showed you some divergence on the daily chart, which is more important. But to try to really time those entries and exits, if you really want to hone down to the minute or the day, which at times I can catch a bottom really you know within the very day or day before, day after. is I like to see positive divergence. So I'm going to show you, lay out my two scenarios. They're both bullish for GDX, but I can see this possibility, and we'll know tomorrow. So if you don't want to jump the gun, well, let me put it to you another way. We closed right at trend line, right at the downtrend line. That's resistance. So number one, you can't do anything till the market's open. By the time you, even if you listen to this video tonight or tomorrow before the market opens, GDX is either going to gap up above this or it's going to gap down or open flat in the reverse. So there's not anything you're going to miss out here. So what I'm looking for is if we do fail here on this trend line, and that's a possibility, what I'd like to see is a divergent low. And I'll draw it out here for you. So divergent low means positive or bullish divergence, and it would look something like this. Early this week, ideally tomorrow morning, one more thrust down in GDX, slightly undercut those lows, a lot like what I was talking about in the broad markets recently. See a reversal, that would then put in positive divergence as long as that new low isn't much lower. Because remember, if we move a lot lower, we take out that previous reaction low, and we no longer have that positive divergence on these momentum indicators. So if we get another thrust down followed by a reversal, confirmed bullish divergence here, at least on this 15-minute time frame I'm on. If you're not tracking, I know I'm trying to do this video fast to get it out. There's the time frame right up top. And then your buy signal, if you don't want to jump in too early, would be a breakout above that downtrend line. So it could come again. We don't have to have that new low. We could pop up in the morning. These levels are very near term potential targets, but again, let's not focus too much on this 15-minute chart. If this trade plays out the way I think it will, you can see my target zones. Again, they're marked right here. You can see these levels here. And I also showed you on the daily chart. This would be for a swing trader. And so I'll probably put these out, or at least GDX is an official trade idea. Maybe we'll see how things open. At this point, we might as well. And this is also potential target all the way back up here again to about the $25 area. You can see that that has capped, give or take, from about 25 to 25.88. That's capped all the advances going back to late 2016. So, the bigger picture, if you just take a step back and look, this is a big sideways trading range for GDX. And we're going to break out one way or the other soon. I want to just show you a couple other things that help support the case for long. This is a list of all the components of GDX, and I have these sorted by market capitalization, this column here. So these are the biggest names in GDX. If you just followed, the top 10 or so, that's going to give you an idea where the sector is going. So let's start out with Newmont. That's the largest one at about, 19.5 billion. Beautiful chart right here. You had all these divergent lows that I've pointed out in the past, and divergent highs, I should say. You had negative divergence here, strong, powerful negative divergence at that high, followed by a big, powerful correction. You can see the divergent low right here. That's when you want to go long. So this, again, is what I like to do as a swing trader. Find these divergent highs, these divergent lows like that. And divergence in itself, as I often say, is not a buy or sell signal. Usually when you zoom down, you don't see it here, but if you go down to the 15 or 30 or 60-minute charts, you'll see some type of resistance level or bullish chart pattern, and that's where you go long on the breakout. In this case, we had a pretty well-defined downtrend line. I should stop it at this point. We had a divergent low. This aligned with that bullish case I made for gold and the miners back in December. There was the December bottom. There was a big rally. We got in down at the lows because GDX told us to on the breakout of the 60-minute falling wedge. Popped, had a nice rally, ran into resistance. That resistance was defined by these reactions back here, and that's where that run ended. However, take away all those lines, forget about what's happened. Most importantly, this trend line, again, at this point, that's where we broke out. You extend that trend line, and it's still very much valid. And that's we've come down. We made a perfect back test to that trend line, hammered right off it on Friday. And just below that, and this also supports that my alternative honestly, it'd be a 50-50 coin toss whether we get that new low and might even lean towards that. You can see that white line just above that blue line I just added there. Look at all those reactions. Look how many reactions on this level here. And so what that would do, if we do get one more thrust down, we'll make another back test of this trend line, but we also have very good horizontal support. So I think the a case for a long in Newmont, especially if we revisit Friday's lows or take those out by a small amount, is very good. I think that's where, as a long-term trader, you want to go long. Um, hey, it either works out or it doesn't. All I can tell you is that is an objective long entry. And we'll look at a few more. No reason to go through them all. They look very similar. Here's Barrick, ABX. We had this falling wedge pattern, very well-defined downtrend line. There was a divergent low right there. There was your bullish divergence. It broke out, ran up, hit resistance. You can see a very well-defined resistance level going back for well over a year. That's where that one stopped cold, and there's a correction. So what have we done now? We've basically come back. If you extend this downtrend line and you extend that, this is a wedge, a falling wedge pattern. We're now back testing right around the apex of that wedge, and we have positive divergence on the daily chart. So again, I see at least a swing trade opportunity here, but with these bullish divergences on the daily time frame like we had here, you can see those led to nice trend trades. These were big moves in Barrick. If you want to measure it out real quick, that one alone right there was about a 50% move. That second divergent low was about almost 20%. And so we could easily see that again here. Again, Franklin, Nevada, I can go through all of these, but there's no reason. I'll just stop here. Franklin, Nevada, FNV. This is a very well-defined support level. A lot of reactions from above and below over the last few years. We don't have divergence, but the stock is very oversold. In fact, it's about as oversold as the stock has been in a long time. And what I like to say with the miners, especially with the gold mining stocks, birds of a feather flock together. If the rest of the sector reverses, there's a good chance FNV is going to reverse with it. So there's the case made both on GDX as well as some of the top components. And if you're still with me, we'll just wrap it up at the very near term outlook for the US dollar via the Euro US dollar pair. This is a weekly chart. We'll start out there. This, if you remember when I started the video out, we were looking at the US dollar index. The euro is by far the largest component. Well over half of the US dollar index is benchmarked against the euro. So you can use this euro US dollar pair, and the chart will almost mirror inversely, upside down, that is, the chart of the US dollar index. And that's what I like to use when trading it. So what you can see, this is that in the dollar, it was a topping pattern, but in the euro US dollar, it's a basing pattern. Because when prices are going up, it means the euro is rising against the dollar. The dollar is falling. So as you can see, just like we had the divergent high in the dollar index, here we had a divergent low, which is bullish. And finally, we broke out of that base. And when we did, I forecasted at the time a move that might come back in, back test it, and that's exactly what happened. We broke out, back tested, punched up. So now longer term, what I see here, this chart longer term is bearish. And that's why at this point in time, I'm looking at mainly a swing trade, maybe lasting a couple weeks, few weeks, maybe even into a couple months. But if this chart plays out, I see a couple things here. I see a trend line back here. At this point, I had a large triangle pattern. This was on this chart for a while, and I just recently extended that line, and you can see that's exactly where the euro US dollar stopped so far. Zoom in. And so what this would indicate is over the bigger picture, looking out months, is this pair may have topped, and you have a divergent high. We may come down, and it could be a sizable correction. And what that would mean is dollar up. However, the very near term, let's zoom down. Daily chart. Here's that. I covered this most recently in the video, I think last week. There's your divergent high. So far, we have corrected. Remember, I highlighted this support zone here, these two lines. So far, that's where we've stopped. We've had 1, 2 tags at the bottom of that support zone, followed by a bounce. So I think we can get another thrust up within this wedge. Looks something like this. Maybe another thrust up, keep these divergences intact, and then finally the big correction in the euro US dollar, which means euro down, dollar up. Dollar up means gold down. So again, I might be confusing you here, but let me put it very clear. Near term, I'm bullish on the miners. I can see a possible little more downside early this week. Maybe, maybe not. Probably put a little bit better than 50-50 odds that we get that one more thrust down, but close enough that I don't mind. I'll start taking some exposure on Monday, no matter what happens, and with room to add to it. And again, watch those levels. We break out, great. We may backtest that wedge on the GDX 60-minute chart too, that trend line. But this is what I'm looking for longer term, and that doesn't bode well for if we see the euro falling against the dollar. That's going to mean dollar up, and that's going to put pressure on gold. So that's what I want to do here is sort of a hit and run trade, just like the last one we did. Get into GDX, get in there for a couple weeks, and get out. I'm going to wrap the video up here. And again, remember the charts are dynamic and so is my analysis. So we'll have to see what happens this week. If things start to play out the way I think they might, then we can, put on some official trade ideas for gold or maybe some of the individual miners. And if they don't, then we'll just have to take another look at things and see where we go from there. And this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.